They promised convenience, innovation, a revolution for dinner tables. Instead, they delivered a graveyard of companies. The vibrant market for hyperlocal meal kits, once hailed as the future, was decimated, not by a lack of demand, but by a savage, self-inflicted wound, an all-consuming price war. How did an industry, built on the promise of efficiency and fresh ideas, crumble under the weight of its own ambition? This is the story of how the pursuit of market share, fueled by seemingly endless investor capital, distorted unit economics, led to a race to the bottom, and ultimately, reshaped who survived, and who vanished. Our story begins with Nourish Now, a pioneer in the hyperlocal meal kit space. Launched in the mid-2010s, Nourish Now identified a clear market need: busy urban professionals craving fresh, healthy meals without the hassle of grocery shopping or extensive cooking. Their model was simple yet effective: locally sourced ingredients, portioned, prepared, and delivered on demand. Nourish Now meticulously managed its unit economics. Each meal kit was priced to cover not just ingredients and packaging, but also local kitchen staff, delivery driver wages, and a healthy profit margin. They grew steadily, building a loyal customer base, proving that convenience, backed by quality, justified a premium price. Profitability was their guiding star, not simply growth at any cost. But the scent of a growing market attracted predators. Enter Feast Fast. Backed by billions in venture capital, Feast Fast wasn't interested in slow, sustainable growth. Their mission was clear: conquer the market, no matter the cost. They launched with aggressive pricing, often selling meal kits below their actual cost, using investor money to subsidize every order. The price war ignited. Feast Fast's strategy forced Nourish Now to make an impossible choice: bleed market share, or slash prices and bleed cash. They chose the latter, cutting prices to compete, hoping to weather the storm. But Feast Fast doubled down, offering steeper discounts, free trials, and referral bonuses. Customer acquisition became a desperate, expensive arms race. Both companies were now burning through capital at an unprecedented rate. Feast Fast, with its deeper pockets, could sustain the losses longer, but even their venture capital infusions began to look insufficient. The unit economics were in freefall: the customer acquisition cost, or CAC, for a single new customer often far exceeded any potential customer lifetime value, or CLTV, those customers might ever generate. It was a vicious cycle of unsustainable growth. The reckoning arrived as investor sentiment shifted. Funds became wary of companies that prioritized market share above all else, with no clear path to profitability. The well of cheap capital for Feast Fast began to dry up. Their frantic attempts to raise new rounds failed as potential backers saw the gaping holes in their business model. The promise of future monopoly wasn't enough to justify the present hemorrhage. Feast Fast collapsed almost as quickly as it rose. Thousands of employees were laid off, suppliers were left unpaid, and millions of customers were left without their promised, impossibly cheap meal kits. The market, once teeming with hopeful startups, was now littered with failures, a stark reminder of the dangers of chasing growth at any price. Nourish Now, though bruised and smaller, survived. They had learned a harsh lesson. They scaled back operations, refocused on their core profitable customers, and, most importantly, never again compromised their unit economics for fleeting market share. Their focus returned to quality, sustainability, and building genuine customer loyalty rather than buying it. The hyperlocal meal kit industry eventually recovered, but it was fundamentally reshaped. Survivors understood that investor capital is a tool, not a substitute for profit. True value isn't just about the lowest price, it's about sustainable operations, thoughtful growth, and a clear understanding of what it truly costs to deliver. The market doesn't reward the cheapest, it rewards the one that truly understands the cost of everything, and the value of anything.